Recording has started. It is 9:33. It is not pie, not American pie, but perhaps pie will reveal itself. Perhaps we will navigate a route through pie. What am I talking about? Maybe Fibonacci. I love Fibonacci. We have not done enough Fibonacci. We've done no Fibonacci. Ladies and gentlemen, it is I, Hugh Hendry, the asset capitalist, in the wonderful Zen bars. 9:34 on a Friday night. The old me, I'd be at Bagatelle, be drinking tequila, but here I am, and I'm no longer in Blanc Bleu, and maybe my voice is quiet because I'm staying in the what I call the ghetto. It is not the luxury of Blanc Bleu. I have neighbours. Goldie, the 22-year-old blonde, beautiful Goldie, who is my villa manager. She's been staying here. And when I got back, oh my God, it was so clean. I thought I was clean living, but clearly I'm a slob just as much as every other guy. Now I think I'm on this new concoction called StreamYard, and it's got fun things that we can do. Well, not collectively. All we can do is I can talk, and maybe if I'm very lucky, you can listen. What is that Hollywood saying? Never share a stage with dogs, pets, animals, and kids. And then later on in the world of finance, they added, never share a stage with Hendry. Oh, it stopped. Goodbye. That's the end of the show. It was a quick one tonight. No, there's more to go. I've been talking for 5 minutes. So George was telling me how I should really be talking to girls. I'm getting it all wrong. Unlucky in love. That's not true. But he's also teaching me how you communicate. Like, social media is really like talking to pretty girls. I'm finding that fascinating. Anyway, so I was setting up this piece. You know, he's got lots of followers, him and Brent Johnson, not like little old me. And I'm like, hey, and last weekend he was here, and actually it reminds me of a story. My one of my kids had to do an essay, a legal essay. Can't quite remember the context. And my ex-wife, an advocate, a lawyer, assisted him and kind of partly wrote the essay. And the kid's score was, Actually, I've got more. How do we do it? I don't know. The kid's essay, what they got. What? I got a very, forgive me, this is going to be even more annoying than usual. I have to entertain myself. Yeah, it got really poor marks. Actually, it wasn't one of the kids. It was her sister who was doing an MBA and had to write a legal essay. Why? What was I talking about that took me into that? Yes, George Gowan. And so I'm like, hey, what? Apparently, I was like a hedge fund guru. Still, maybe can be sometimes. I can say intelligent things. And he was telling me about his CarMax, and he was doing a pairs trade, and we discussed this. And I spent the weekend saying, George, oh my God, you're such an amateur. You're the king of social media, but no one does pairs trading because, risk reduction, and therefore, if we ever get kind of 2 or 3 Z-score type days where the S&P might fall 10%, you probably find that your karma, you're long something that's down 10%, not good, and you're short something which will probably rally, really not good. So I was beseeching him to cover And then I decided to put a little kind of thread out there on Twitter, like saying, "Oh, George, you're an amateur, I'm an expert." And George is on WhatsApp and he's laughing his head off. He's like, "Oog, Hugh, check the monitor. I'm like, "What monitor? My heart monitor? Hold on a second. Heart monitor?" I was thinking. I'm loving this. Hold on a second. I was like, "George, what?" He's like, "Yeah, no. That is the sound of a Death Star." CarMax was joining Karl Marx in the cemetery. Oh my God, pull it together. Stop having fun. CarMax, the United States, the largest retailer of secondhand automobiles. It tumbled. I don't think tumbled is the right adjective. It collapsed 24% on Thursday, closing around about $30. The shares are now down to their lowest level in 15 years. And no mercy was shown to the long-standing chief executive. None. Bill Nash got slashed. Been with the company for 30 years. Departure immediate. They're like, sling a hook, get out of here. Also, they kicked him off the board. They're mighty peeved. Company, it's now cut its earnings per share. Who cares? To somewhere between 18 and 36 cents, which means like we don't know. And the Wall Street consensus had been for 69, no more. What's going on? The same store sales now expected to decline, let's call it 10%. Where analysts have been like, yeah, they've been kind of bearish. They've been looking for like a 2.5%, 3% decline. No, 10, maybe 12. What's going on? And this can get, there's relevance in this. A pull forward, we borrowed, we reached out and we pulled the future into today over consumption. I mean, we're doing that with debt. We're pulling the debt capacity of the American economy over decades, and we're pulling it very selfishly, and we're consuming that debt on lots of crazy shit, pulling from the future. And what was happening was tariffs, price. I mean, cars, I am amazed. Cars are really, I have no idea about real life. Cars are really, really expensive. And if you can hear a guggle, not gargling, but I'm drinking water out of a glass bottle. Yeah, a shitty brand new car costs you like what, 20, 25,000? A kind of run-of-the-mill family car, 40,000. They all look the same, but put a tariff on top of that, and that's a big deal. So people were buying cars and buying second-hand cars ahead of the tariffs, and so that confused things. And actually, so this is something which is spontaneous. The cobweb theorem. Running a business is kind of complicated. Even the guys who manufacture toothpaste, I'm pretending to brush my teeth to the camera. Toothpaste. I mean, there are no variable lags or booms and busts in toothpaste. And yet, they tell me the manufacture and the ordering and the inventory is a complex task. Back in the day when I worked in Edinburgh, of course, we had an investment in, at the time you could invest directly in independent whiskey companies. And you were essentially They were wonderful, but they were time capsules. Whiskey heritage, and it's 10 years old. But think of the complexity and the demand curve, not the curve, but the theory there is the cobweb or the hog cycle, that you're having to make decisions in the here and now for a product that you're going to sell in 10 years' time. And I'm saying to you that the guy who sells toothpaste, he's not struggling, but it's still a science to know how much to produce the week before or the month before, never mind 10 years before. And of course, you're constantly getting it wrong, but with these huge time lags, which then create huge price effects. And so we saw a lot of that in CarMax, and it's very much at the root of the debate on the US economy. This is a macro show. We are supposed, the royal we, me, you, no me, I'm supposed to tell you about the day's economic data. What did we get? We got the Michigan, the Consumer Sentiment Index, and actually it's for November. Remember the 7th of November, or the 8th by the time you hear this. Michigan consumer was down at 50. There's a decimal point in there, but you would round it to 50. And that was down from, again, we're going to round the decimal point up a little bit. So to 50, it was 54 in October. So 54 to 50. Consensus had been 53. Now, to make this more realistic to those of you listening in your earbuds, the long-term average of the index is around 85. And it hit, is this true? So it hit a record low of 50 in June 22 amid fears of the pandemic inflation. So it's pretty much on, consumer sentiment is on crisis levels. I am looking at the University of Michigan consumer sentiment, and I am looking at it from, me, I like looking at as much data as possible. And it was 50 back in 1980 recession. Very high interest rates, 16% interest rates. Oh, sentiment would stink. The highest reading ever was in the year leading up to the tech bubble at the end of the century, 1999. That's as high as it's been, and it got to 110. Interesting, the comparisons today. You can't read an investment report on tech without a comparison of AI and data centers to global crossing and dark fiber, the exuberance of the stock market. Well, the exuberance of the stock market was being disseminated and passed through to consumer sentiment. The consumer is 70% of the economy. So you had a double positive whammy. Stocks were up, the economy was up, people felt good. What you can categorically say today is, my God, stocks have been on it. Stocks have been everywhere, but they've been mostly up, but they did fall. NASDAQ at one point this year was down 20% on the year. The S&P was down about over 10% on the year. And then the S&P was up 15% and the NASDAQ was up 20%. So we've had huge movements. But the consumer sentiment is on its ass. It's a really, really interesting, remarkable chart. It's not a remarkable chart, but I didn't know that. I did not know that. We are the levels of consumer sentiment that we saw during the exceptional period of the COVID. In fact, we're below those levels. You could argue we just kept going. Like, COVID wasn't good for sentiment. The government spending, the inflation that it generated wasn't good for sentiment. And we're at levels that you associate with 2008, 2009. We're at levels you associate, in fact, we're lower than than the savings and loan crisis in 1990. And we're even lower than when the Fed was at 16% interest rates in 1980. So that's I think that calls for an intervention. Heartbeat. I know what you're saying. I've become Jimmy Cramer, but consumer sentiment. I mean, I'm like, I'm sorry. Nick, do you know that expression? Nick la police. Again, we're jumping off. Do you know the biggest rap band, fantastic rap band in France? I do not say that's an oxymoron, because there's some amazing French rap. But the biggest band, like going back for the last 30 years, is NTM. And NTM is an acronym only in France. Do you know what NTM stands for? The French people are like, yeah. Would you like to know? You're like, no. Okay, I'm going to tell you. And again, hold on a second. It means nique ta police. What? And nique? Oh, nique ta mère. Nique ta mère. And a nique means fuck. So it's fuck your mother is the name. You can't make this shit up. Is the name of the biggest rap band in France. And actually it's quite a jovial term. Like if you like, rather than go high five to your friend, you go, hey, nique ta mère. I use it all the time. Nique ta mère, motherfucker. Nique ta mère, how did we get... Oh yeah, we were talking about consumer sentiment. Oh, and La Haine. My kid Cameron, he has La Haine. He's a tattoo there. Brilliant, amazing movie that created the star of Vincent Cassel. And they have a lot of in the suburbs, and there's riots, pushback, and the cops, and the youth of today. Oh God, I'm like, have I been drinking? Is there tequila in my water? When I was younger, look it up. The musical Youth, the youth of today. And they had this great song called "Pass the Dutchie on the Left Hand Side." And there was this program. I mean, there are about, I think 40% of the podcast gets gobbled up by the citizens of London. So you know what I'm talking about. There was a kids show called Blue Peter, very, very respectable. And they taught you origami, and it was boring as hell. But they had the little black London kids come on and go, pass the Dutchie on the left hand side. And it was the Caribbean tradition where you've got to pass the joint to your neighbour on the left hand side. And the Blue Peter, the white folk were not aware of it. If they were aware of it, then stop it. Right, what was I talking about? Oh my God. So consumer sentiment. Notes. I do have notes. Come on, notes. Note to self, stop being a friggin' idiot. But yeah, Michigan consumer sentiment. Then, I think this shows why what is my recurring message? Don't press your nose too close to the window to look at the economic data. Take your time, ignore a lot of it. Just keep your eye on trend and price. Yesterday, all my troubles seemed so far away because we had the ADP private sector report. I now have neighbours and they're talking. I hope it's not messing with the soundtrack. I'll have to call the cops. ADP was celebrated. Today we got the Fletcher Gray report. Challenger, Fletcher, I don't know. It's all grey. And it reported 153,000 announced job cuts. ADP, on the other hand, was celebrated. And it was demonstrating 42,000 new private sector jobs. I'm hesitating. If you could see me, you would. I'm like, this is crazy. So what's going on, and which should we trust? Don't trust any of them, but if I was to say something close to being sensible, the Challenger report is kind of more indicative of where we're going, because it's announced cuts, it's gross, ADP is net. So Challenger is going through all public announcements from companies, and actually Challenger is also picking up public sector data. And so some of these announced layoffs might not happen. But right now, on the basis of discourse from companies, the intention is to lose 153,000. Now, again, statistics, damn statistics. So, and this title is called Challenger Grey and Christmas. Challenger Grey and Christmas? Why'd you put Christmas in there? Anyway. Those job cuts were 183% greater than the month before, or September. Is this for November or October? I think it may be October. Now, here's the bit. It was the worst. Let me get this right. It was October, and it was the worst in terms of biggest job cut announcement for the month of October in the Challenger Grey and Christmas series since October 2003. But here's how they mess with statistics. The headline. What did the newspapers do? Most October job cuts. Job layoffs. This was the headline. Job layoffs surged to 2-decade high. It's not true. Pants on fire. I mean, I did say to you the other day that job cuts look as if they're running at just under 1 million job cuts. And that's up, like, I want to say 50% from the year before. But you got to go back to 2023, not 2003. 2023 knows 2020, that impact year of the pandemic. And there was over 2 million. You see statistics. I read something. Sometimes, does this happen to you? Sometimes I stumble into, what do they call it? I'm moving my screen. Yeah, you on Twitter, X, the X platform, you have notifications, and you have actually not notifications. You go to home, and there are two choices: for you or following. And sometimes it defaults for you. Now, for you is crazy universe. Lots of really, really fucking crazy things come up on that teleprompter. Following, I've had a chance to kind of like even out. There was actually about a 6-month period where I didn't know what had happened, and I was stuck on for you, and I was just getting crazy batshit Alex Carp type stuff. But anyway, so I was on this default, and this thing came up about, I think it was rosemary, you know, the herb. I really like rosemary on a potato. I like it in a bush. Rosemary is one of my favourite bushes. Why am I laughing when I say bush? Black Forest Gâteau. Oh, I'm sorry, where'd that come from? Oh, it's Hendry. Bush, I keep... Oh yeah, rosemary. And it was saying, wow, the science has discovered that the odor of rosemary, it sets off something biologically in the blood, which, you know, when we're getting older, like we're not as good at like Pac-Man and eating up the sentient. Sentient means the dead cells, they hang around better and stuff like that. It was like rosemary would help, and so you'd be getting good cleansing, especially for the brain. It's going to keep you smarter, and they had a study which revealed that students who were sniffing the rosemary were outperforming on memory tasks. I thought, and it was like, hey, maybe you should have a stick. I mean, you should have a stick of rosemary with you all the time. Why not? I think I'm going to do that. Maybe the next show I'll have a stick of rosemary. Still coughing. Now I've got dogs. Hold on a second. Hold on. If you can hear the sound of dogs, then you understand that we need. I don't know if you're hearing that, but I have shot the dogs. Anyway, so I put it into the thinking, the pro aspect, the pro part of ChatGPT, and it's like, is this real? I don't know. And so it cannot calculate compound annual growth rates, but it's like, this is a crock of shit. First of all, the sample size of the study is 144 elementary school kids, and you're trying to extrapolate to the 8 billion people in the world. I mean, 144 people. Why don't you try 100,000 people? And then this is, so I got into this cul-de-sac because of the media's use of the Challenger data, which was statistically the worst or the largest amount of layoffs since 2003, but the headline was the worst layoffs in 20 years. No. And they did the same trick here. And I think they do this. I'm pretty sure this is a technique, social media technique, when you've got some stupid, chocolate makes you, I was going to say makes you, is healthy. I mean, I do buy into that dark chocolate. But even then, I've stopped eating all chocolate. But yeah, the technique for getting attention is you put out an announcement and you make a factual error, which then gets copied by someone else and gets tweeted or whatever, gets disseminated. And so the error becomes the focal point. And that's what happened here. It was saying the study revealed a 71% improvement in memory. But actually what had happened was the report, when it was sent out, the first newspaper to report on it said the report was a 7.1%, 7.1, but it was reported by the first newspaper. There was a typo, and I bet you they were paid for the typo. Supposition by me, evil supposition. You kind of underhand, and you give the newspaper a pot au vin, as the French say it. Forgive me, a bribe, and they take 7.1 and they make a mistake and it becomes 71, and then no one corrects it. Just shocking what happens. Anyway, I'm now into 30 minutes. This has to be done in an hour. Do, re, mi, fa, sol. I didn't think I was going to be singing to you tonight. We've done consumer sentiment. We've done jobs. Oh, yes. Okay. The exports. China's exports. In October, China's export figures, they disappointed. Tariffs. Again, they this time last year, they were exceeding expectations, and now they're disappointing. And this shouldn't be of any great surprise, but markets need drama, and the practitioners in the economics field are useless. October Chinese exports contracted. They fell 1.1% year over year. The expectation was modest growth. Is the expectation modest growth? Why was it modest growth? And then the other challenge, and I can't get to the bottom of this. So they contracted 1.1%. Is that volume, or is that volume times price? I think, it's volume. So is it the nominal value, or is it the number of units? I think it's the nominal value. And when you consider the tariffs ranging from 25 to 140% on Chinese products directed to the US economy since the what's it called, Independence Day or whatever, April 5th. That's a big deal because it should be up. If the volume was the same and you were paying like a tariff of 25%, it should be up a lot. But instead, it's actually down 1%. If anyone's got the answer to that, let me know. I cannot. I think I'm right there, but I cannot say hand on heart, absolutely. Exports. I wrote the Chinese export figures, that was globally. And they were the weakest in 8 months. And I think it was exports to the US, actually shrank for the first time in about 18 months. Was that you? I'm a bit confused what I'm saying there, but I did read somewhere. I wrote, I like writing little cryptic things, but I did write Chinese exports shrank for the first time in about 18 months. Exports to the US, they did plunge 25% year over year. Again, if that's volume times price, that's a huge decline. But then here's a twist. So again, did you read this? This is breaking news. There was a breaking news asset. Where is it? Drum roll, applause, heartbeat, more sounds. Breaking news. I'm sure I saw breaking news. Breaking news. Can't see breaking news, but I do see breaking news. Don't see it. What would breaking news sound like? Don't know. This is breaking news. Yeah. So I was saying to you that Chinese exports to the US down a lot. Down a lot, my friends. Down 25% year over year. But the American Chinese or China's trade balance with the US, obviously it's a trade surplus. Exports decline 25%. The trade surplus goes up. Up. How is that? I mean, it doesn't go up a lot. But you're like, the Chinese are like, you want to fuck with us? We're going to fuck with you. So they cut back on soybeans and they're like, I mean, they're tough cookies. Anyway, so that's data. I think we can do this in under an hour. Pretty sure we can. That's 40 minutes. Stocks are falling, tech's falling. What's the front page of the commie pink Financial Times? Tech stocks suffer. Worst week since April after 800 billion. I mean, I'm surprised they didn't say after $1 trillion AI sell-off. And again, I think I was suggesting to you that the pernicious nature of stocks are mean. Stocks are mean. The system's mean. Stocks will travel in the direction. What do people say of least resistance? No. Stocks will go in the direction which causes the greatest consternation amongst the most. Which is to say, stocks will go to the point which pisses off the most number of market participants. That's where they go. Time and time again. They go there and they go, how are you feeling? We discussed that the other day. I was likening the periodic pullback in stock prices, pulling back, mean reverting, and stocks rise. But it's a mean reverting upward price series, but they revert. And the reversion is very emotional. And it converts faith into denial. And this show is all about trying to help you with that tough journey. And it was just the other day, Wednesday, and I was saying to you, S&P was down 10% going into April on the year. And then it was up somewhere between 10 and 15%, so kind of 25% off the lows. NASDAQ had a 40% reversal to the upside. And it pulled the 1 year, which is the tortoise, the slow-moving creature, was kind of up 12, 13, 14, 15, depending on the index. And of course, the spot price, which is the hare, which runs very fast, was up here. And so the real danger of a 20%, 25% pullback, we're seeing that now. One of the charts I saw was Oracle. Oracle has round-tripped. It got that great, was it was it ChatGPT that signed him that deal? And I was watching the All In YouTube podcast show, and they had that, I don't know, what's it called? Brad Setzer, the one who wrote the open letter to Meta, saying, hey, you want to get better? You want to like actually run the company seriously? And he managed to capture a great buying opportunity, and he got the mind of Zuckerberg, or he got lucky. Same thing in this business. But I had missed that. He'd been on a show during the week with Sam Altman. I have to say, I do not. Something about Sam I don't like. There's something about the night about that man. And anyway, the investor who's actually has a big lump of stock in ChatGPT and would ideally like to own more of it, he asked a very relevant question. Like, Sam, can you just explain to the wider world how a business with actual revenue of $13 billion is signing deals for capital expenditure of $1.5 trillion? That's 1.5 million millions when the revenue is 13,000 millions. 13,000 millions is revenue. 1.5 million millions is the capex they're signing. And Altman was just nasty. And people are smart on Wall Street. And they're like, why is he nasty? Why is he prickly? What's in his head? He's having a bad day. I'm going to tell you, I was having a really bad day. A really, really bad day. I'm telling you, I moved house last night, and I have 3 cleaning ladies from Colombia, and they do not speak English or French, just Spanish. And they are devoid of intelligence. Now, it's not their role to be intelligent, but when I say devoid, I mean we're talking about almost zero intelligence. So I get home. Now, one of my passions, now if you're listening to this, you won't get this, but one of my passions is my glasses. I have about 12 pairs of glasses, sunglasses. Must be about $15,000 to $20,000 worth of glasses. And they were all out of their cases at Longwood. But you would surmise that the ladies in packing my luggage would have put the glasses in the case, in a bag, and everything would be fine and dandy. They did not. They took all of my glasses and they put it in a bag, and that bag got lost. So I spent most of last night and most of today thinking that my identity, me. What it is with the glasses is I look like my mother. I have my mother's eyes. Being very honest with you. And my mother died just under 2 years ago. Which was a blessing because she'd had dementia. And so you see the awful, awful, awful decline. She used to wear glasses, but then she didn't wear glasses. And I would see those eyes, those dead eyes, and I could see me. And anyway, I don't know. I've been wearing glasses well before she got dementia. So I was not a happy chappy. And I was, they're getting fired. Right? Don't tell them. But they are getting fired. And, I was telling you about the blonde, Goldie, the 22-year-old. Turns out she had them. They were in the fridge. Anyway, I got my glasses back. So that was a bad day. What was Sam's bad day? We don't know. But that didn't help with the sentiment in technology stocks. And again, Oracle. Interesting chart. Trader Mike, I met with him in Eden Rock. He sent me a message. He's like, gorgeous girl, the waitress. What's her name? I was like, oh, Madea. He's like, she's asking after you. Where are you? I was like, I'll be there. I'm coming. And oh my God, I was talking. She is so beautiful. And she was like, well, and she wasn't happy with me. So I was in another bar writing notes for these shows, Bar Select. And this dream girl came up and said, oh, hi. She was very familiar and was talking away. And I had no idea who she was. Because she was like wearing a bikini, whatever. And so one of the problems is I know she knows me and I know that I know her. And I want to kind of, ask her on a date for a coffee or whatever. But she knows that I know her. And so I should know if she has a boyfriend. It's complicated. You see, that's why I need George Gammon. The CarMax, short seller extraordinaire. Anyway, I was talking with Mike, Trader Mike, and Friday is when everything's expiring. Mike, stocks crash, people panic. Mike rents the chaos with covered calls. And so, he's got one position right, and it's a special set, so he just knows it so well. So this is not a great company, but he's a kind of a horse whisperer. He's the algo whisperer. He knows where in the range the algos push the price higher and lower, and he writes his calls on the appropriate points in that cycle. And it's got very credible active investors who are pushing to change it from the Bitcoin miner to data center. But that'll take a while. And so Bitcoin, data centers, we are talking about a humongous amount of volatility, which is to say the options, because volatility is the principal component of options. The what is that? Extrinsic. When it's so volatile, so it's not whether the options in the money, at the money, out of the money, is like between now and that period, the expiration period. If it's very volatile, then the uncertainty is so great. So if I am an options writer, I protect myself by making it very, very expensive to cover being risky and volatile. And remember, Mike's selling the very, very expensive. He's selling the options. And so it's the beginning of his week, if you will, today. And he has amassed an enormous position once more. I mean, so he had been, he breathes, he inhales, he exhales, the acid breath. We haven't done that. I will save you from the shipping news. The natural evolution of markets. When markets or some of his stocks have become excruciatingly weak, then being excruciatingly weak, so they've fallen a lot, then he is more willing to underwrite the downside risk. The more they've fallen, the more he's like, yeah, okay, I'll come in here. I was thinking to you about Solano being down about 40%, and he's like, okay. And Salt, the 2 times leverage, so being down the best part of 80, and he's like, okay. I mean, if it falls another 20, that's like 90%, and I'll buy it anyway, so I'll take that risk. Anyway, with Riot, Bitcoin miner into data centers, ceteris paribus, if nothing happens, and it goes sideways or it goes up, he's going to make 5.5% income in a week. I wish I'd done this earlier. I'm going to write it in. What if I ask it, then it'll bust my recording. But what is? I don't know why I am asking. Okay, I'm going to ask you. See who get the number faster, and I bet your number will be better than my ChatGPT number. But what is 5.5% per week annualized return? Okay, boom, 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 boom. Actually, let's make some noise. What have you got? That is 1,536%. Maybe that's an hallucination, but 5.5% weekly. If you can compound it 5.5% weekly, your annual return is going to be enormous. I can see why Kramer got tedious and very annoying with these things. So 5.5% a week is a hell of a lot. But Mike's like, oh, I'm not sure. He is contemplative and reflecting on where does the market go from here, like everyone else. So there's an interesting. Is there any point there? But these markets seem different. These markets have changed. These markets have evolved. These markets are, frankly, much better. We've always had, if you will, automatic stabilizers. Greed and fear. Nasdaq went from being down 20% to up 20% on the year. A 40% move in April, 5 months. And people start getting fearful and lightening position and arguably sell and prices reverse. Nasdaq being down 20%, people get greedy. The Riot, the special sit that Mike's playing, the 5.5%, he's like, I'm kind of getting greedy. So what I want to say is, it's not just price declines. It's not just like the price earnings ratio gets lower, the dividend yield gets higher, the valuation becomes a compelling talking piece. It is actually that with the preponderance of trading that's being conducted through options, there are some amazing potential opportunities, lucrative opportunities that emerge when prices fall a lot in very volatile areas. But here's where it's hard. So the Oracle, so in the Substack, I'll do the essay of this and push up the charts. And Oracle looks intriguing, but remember, one of the caveats of Mike's great strategy is he will buy outstanding world-class companies. So that there's a caveat. There are not many of them. And Oracle is arguably one. I have no argument with that. But then he goes on to say that have fallen 60%. And Oracle certainly has, and it's just reversed some of the blow-off craziness from that last deal. So he's not coming in to do that deal. We were discussing doing that with Bitcoin, maybe, and he was going to tell me, he didn't come back to me. I would suspect you're probably looking at 3% by doing covered calls. And I'd be 3%. So let's put, have you got the answer yet? What is 3% per week? Annualized return. put that in. I think we got to do the drum roll again. 336%. Sounds about right. But how much of being able to get about 3% per week, how much maybe that protects you if Bitcoin goes from, it was actually up today from 102. What if it goes down to 80? Are you a buyer at 80 or are you going to be a buyer at 60? You see, these are the deliberations. And they are interesting deliberations. I want to wrap in the next 5 minutes. If I don't wrap, I am going to be screaming at myself. Okay. Didn't we talk about fractals? Yeah, so one of the other ones is meta. Looking at my notes. Meta. So Meta this year, following in the footsteps of NASDAQ, being a principal component of the movement in NASDAQ, went from 480 in April to 800. I mean, wow. Like, that's what, over $1 trillion of market valuation expansion. And today it's 600. Because the kid is just pumping. He's like, he's got it. He's got the fever. And his capex is enormous, and there's a lot of kind of funky, off-balance sheet, opaque financing, special purpose vehicles, things that bring back fears of other periods of excess. And so it's been dumped. And 600. So I want you to think of Meta being climbing a spiral staircase to heaven. And sometimes the ascent to heaven, you come across obstacles. And you have to take a few steps back. Can you hear me? Because I'm back. I'm back to the computer. You have to take a few little steps back before you start climbing the rotating rotunda to heaven. Fibonacci retracement lines are those steps back. And they're a fascination. They're kind of groovy. It's nature. And it's crowd psychology. It's pop culture. Is it pop culture or pop? Pop goes the weasel. But those steps, they're particular levels, fractals. And these fractals work, so you can put these charts and these patterns. Doesn't matter if it's yearly, monthly, tick data, hourly data. You'll get these patterns. And is it a placebo? But traders are drawn to that, and they will have trading orders congregating around these levels. So 61.2 is one of the big Fibonacci, and that's where Meta is trading, having come down from 800 to 600. Another fun thing is what I keep saying, mind the gap. Meta had a gap. Meta, there was a news announcement, and it was so damn exciting that the first stock print the day after was actually higher than the day before. That you didn't have continuous price, that there was this interruption. And so if it closed at 520 the day before, the first print was 525. That's a gap. Gaps get filled, especially if I buy them above. And there was a gap in May. And the gap, you don't need me to tell you, the gap, it got filled Where was the gap? So I'm looking at it now. May. Yeah, the gap was around about 550 or so. So you're at 800. Some crazy souls are buying at 800. They're buying above the gap. You're like, come on. Not going to go back all the way down there. It did. Anyway. I should have said, so I'm conscious we're on the 2 minutes to the hour mark. CarMax, consumer sentiment, Chinese exports, tariffs, human trader behavior. We know there's going to be a price hike. That's the tariff. We order before. And we bring demand forward. And we're now in a period of deficit. The economy is weaker because of that action. And take one step back further, the last 3 years, Steve Mirren and the argument of we've had a change in political ideology, very steep, like a handbrake turn. And one administration in America was saying, hey, come in, get over the wall, become a Democrat, vote for us. And unprecedented numbers came in rapidly. And they were buying used cars. And now another administration said, get out of here. And these people, I'm exaggerating, but they fled. They left everything behind. They left their apartments, their cars, their used cars. And at the same time, I was saying to you, the stock market is different. Everything evolves, it gets better. The options, and then the notion that you get drawdowns, but suddenly the temptation, the greed temptation. This is the point now. Mike is an amazing investor, and he's getting greedy, but he's just a little bit wary about where we are. Why is he wary? He's wary because of the evolution, innovation in finance. And we discussed this, that money, inflation is a monetary phenomenon. But what is money? And the Fed thinks it's M0 and M2. It thinks it's bank reserves captured within the jurisdiction of the United States economy. And as Mishkin, as the idiot, I have all of my listeners are very smart, very clever, very endearing, very acid. But as he was pointing out, evolution in money. Why would you create dollars within the jurisdiction of the US and being under the jurisprudence of the Federal Reserve when you can do it offshore, free of sanction? You can leverage it as much as you wish. It's unregulated. It's very, very profitable. And we're creating more dollars that way. And it's dependent on, so it's not on bank reserves, but it's on collateral. We talked about how stock portfolios can be collateral. You can pledge your portfolio and you'll be given credit. It might be 50x what you pledged. It might be 5. And then we were discussing a new fondness for using invoices and trade invoices. And we've seen a lot of trade. This generation is defined by trade, the immense emergent trade of China with the rest of the world. It's huge export trade with the United States. And it's like, well, hold on a second. Let's factorize the invoices between the US importer and the Chinese exporter and vice versa. That's collateral. And we'll create more money again. And Trader Mike's thinking, and he's seeing the signs. UBS are closing not one fund, they're closing 2 funds. BlackRock are closing a credit fund. Regional banks are always kind of on the cusp of being needy Because who would be a regional bank when I can be an international money center bank and I can be printing dollars offshore? Why would I be in Cincinnati? And they're kind of picking up strain. And then there's all sorts of acronyms coming out of the Federal Reserve and they're plumbing and they're indicating strain. My instinct is, I think, where we are is a pullback. And I can't see things rushing higher immediately. And I certainly would be looking for buying opportunities, but probably not rushing. And I'm listening to Trader Mike for the smart ones, which give me protection. That's where we are. And I wanted to close. I must play more music. Hold on a second. Oh yeah, I know what I can do. I think it's time. I am going to leave you, ladies and gentlemen. You'll be listening to this the weekend of the 8th and the 9th of November. And I truly, from the bottom of my heart, I hope you have one of the best weekends ever. I have clients staying in my house and a couple are being married tomorrow. It rained today. May it not rain on their parade. May it not rain on you. May your heart be full of joyful sunshine. It's a whisper from the geometry of the universe. And it reminds me, at least, that perfection, oh my God, perfection is endless. Thus, we only ever trace its shadow. Good night to you all. This is Hugh Hendry. I am the asset capitalist, and I am gonna have an amazing weekend.